want to dig into what investors should be expecting, especially after they came out with that new big stance on inflation targeting. Here to discuss that with us is Yahoo Finance's Fed reporter, Brian Chung. And Brian, I mean, what do you think might be the most important thing to come from Wednesday's meeting?
Well, the most important thing really won't be whatever Jay Powell says to the mic, but more importantly, what's going to be in that dot plot projection. Keep in mind that the Federal Reserve has what they call the summary of economic projections. They release these every other meeting, so we didn't get it in the July FOMC meeting. We will get it in the September FOMC, where they'll provide some projections for where interest rates might be in the next few years. Keep in mind that as of the last projection that we got in June, the Federal Reserve essentially telegraphed no rate hikes through the end of 2022. But there were 2 of 17 members that said there could be some rate hikes before that point in time. With the change, though, with the Fed's thinking as announced at that Jackson Hole conference 2 weeks ago, it's possible that now all 17 members of the FOMC could be projecting no rate hikes through 2022. But that's definitely worth watching as we head into that meeting. We'll have the full coverage of that right here on Yahoo Finance press conference at 2:30 on Wednesday.
Yeah, the other big question here, aside from how this pandemic goes, which of course is where Jerome Powell always shifts the discussion, but outside of that, the other question is how the consumer is holding up, and that was kind of the focus of a new New York Fed survey looking into, I guess, consumer expectations on the employment front. What did you see there in terms of how they're gauging this recovery?
Well, the New York Fed this morning released a survey of consumer expectations where they had a number of labor market anecdotes where, more importantly, they suggested that actually people are becoming a little bit more concerned about losing their job. The percentage, or rather the mean perceived probability of people losing their jobs actually increased to 18% in the month of August. That's an increase from 16% in July. That reverses some of the downward trend that we had seen in the later part of the summer, people becoming originally more optimistic that they would be able to hold on to their jobs, and now getting increasingly worried that that won't be the case over the next 12 months. So this is definitely something worth watching. The New York Fed saying this was particularly more pronounced among those that have income of below $50,000 per year per household, in addition to those without a college degree, which shows that, yes, the economic recovery is happening, but it's not even across the spectrum. And it's also possibly getting even a little bit more slow, something the Federal Reserve is going to have to pay attention to as they head into that decision this week.
Yeah, a lot to come from that. As you said, the dot plot, the thing to watch, but also we'll see how they assess the ongoing recovery here. And again, inflation's sexy again. So we'll see what they have to say on that front as we continue to get new data